Okay, now let us look into one of the most important aspect and a highly tested area of your IAS 36 standard, which is cash generating units, or we call it as CGU. In this small debrief, we'll be looking at what is a CGU, why do we need a CGU, and finally concluding it with accounting of how do you account for CGU. Okay. Now, one may be having a doubt. What does he mean by CGU? CGU, what do I mean is they are group of assets. Okay, they are a small group of assets, say about 4 or 5 or 6 type of assets. Okay, and their main functionalities, they will only function as a group. They cannot function individually. Okay, and by them functioning as a group, they will generate cash flows. It can be cash inflows or it can be cash outflows, but as a group, they will be functioning. They are small type of assets and they will generate cash flows. Let me take two examples that you are familiar with. One is your airline industry and the other one is your supermarket. Okay. So you all know the renowned reputed airlines, Emirates, Etihad, all of these airlines, they might be having a group of assets. It can be their airplanes, it can be their motor vehicles that is used to transport the passengers and the employees, and also they will be having trade licenses, which is an intangible asset, right? Now, all of these assets, your tangible plus your intangible, all of these are accumulated together. They work as a group and they will generate a cash inflow of 850,000. Logically think and see, by me only having this trade license, am I able to generate a cash flow? I would say no. Just because my company has a trade license to operate a airline, I need to have the aeroplane as well. I need to have this aeroplane as well. Same thing applies to the aeroplane. Just because I have the aeroplane, it does not mean that I am able to function. I need a trade license as well, which is an intangible asset. Okay. So this is one of the examples of your CGU. Can you see here? Airline industry is a perfect example of a group of assets. Okay. And they will be able to generate a cash flow. Okay. Another example would be is your supermarket. You all know in supermarket also there are various type of assets. Okay. You have the refrigerator that you store. You have the racks where you display your products. And after it, you have your billing counter machines, which we call as EPOS. All of this will generate 300,000 worth of cash flows. Again, logically think. Again, logically think. By me only just having this billing counter machine, am I able to generate cash flow in a supermarket business? No. By me only having this refrigerator which stored fizzy drinks, am I able to generate cash flows? No. All of this will merge as a group, and based on that only, I will be able to generate a 300,000 worth of cash flow. Okay. So this is the meaning of a CGU. Okay. And you all can ask me why was a CGU formed? Well, in simple terms, see, as I told you all, let me change this color. As I told you all know to find out your recoverable value, we use a term called value in use. Now, it's very hard to find value in use for individual assets. It's very hard. Now, you take a large scale of business, they have so many multiple assets. It is very hard to find how much this asset will generate, how much will my machine generate, how much will my factory generate. It is very hard to find. So, what they do is they form a unit which consists of group of assets, and then they will allocate your impairment based on that. So this is how we do a cash generating unit. Okay, now let us look into the accounting of your cash generating units. Okay, this is a short question in terms of your MCQ or in terms of your section C adjustment. So be very well prepared in relation to your accounting of cash generating unit or CGU. Okay, you all know you all will be getting an impairment expense, right? a whole lump sum of impairment expense in terms of your cash generating unit. This impairment expense needs to be allocated across different assets. Okay, say for an example, you all have 5 assets in your business. That impairment expense needs to be allocated against those 5 type of assets. Okay, don't worry, we have a question. We have 2 questions coming up, and we will be learning how to do it. Okay, but but there is an order that you all need to follow, right? When dividing your impairment expenses into your number of assets, or when allocating it into your number of assets, there is an order that you all need to follow. Okay, remember this. Your first impairment expense, always, it will be allocated against your purchased goodwill. Okay, say for an example, you had a total impairment expense of 500,000. The initial amount needs to be allocated against your purchased goodwill. Okay, okay. Then, if there's any excess, if there is any excess in your impairment expense, that will be allocated on pro rata basis. Okay, now you might be asking, what is the pro rata basis? Give me about 2 minutes. I'll be explaining it. Okay, I'll be explaining it 2 minutes. Okay, and your final note. We will never impair our current assets. You all know current assets are stock, debtors, cash. They will not be impaired. The reason is they are always correctly valued, right? They are always under their realizable value. Okay, they are valued correctly, so you all don't need to never ever go and impair your current assets. Okay, now this is a repetitive question. You will be always getting current assets in each and every question in terms of IAS 36. So never ever go and impair your current assets. Okay, okay. Now let us look at a question. Okay, Sevco runs a unit that suffers from massive drop. Okay, so massive drop is an indicator of impairment due to the failure of its technology. Okay, it's an internal indicator on 1st January 2008. The following carrying amounts were recorded in book immediately prior to the impairment. Fine. They have 1, 2, 3, 4, 5, 6, 6 type of assets. Okay. We know this is a cash generating unit. So the impairment you need to allocate based on these 6 assets. Okay. You have to allocate your impairment based on these 6 assets. Let's see how do we do it. Okay. The recoverable value of the unit is estimated at 85 million. They have given you all the recoverable value. Okay, fine. The technology is worthless following its complete failure. Okay, I'll explain what we need to do in this. Okay, so you all know your recoverable value is 85 million, right? Your recoverable value is 85 million. Your carrying value of your assets, it's 20 plus 5 plus 10 plus 50 plus 30 plus 40. All of this adds up to 155. Now, basic impairment question. You know your carrying value of assets is 155. That is being presented in your statement of financial position. But you only can recover 85 million. That is the maximum recoverable amount. If so, you all need to impair 70 million. Okay. But now this is not a normal impairment. The reason is because this is a group of assets. This belongs to your this belongs to your cash generating units. So how do we allocate this 70 million across goodwill, across technology, across brands, lands, building, and other assets? Okay, let's read on. The other net assets, can I see here this 40 fellow? Includes inventory and receivables. Okay. Now remember, we learned a rule. We learned a rule. You see that this is the rule. We will never impair current assets. We will never impair current assets. Okay, because why? They are correctly recorded. Okay, so you all don't need to impair your other net assets because they consist of inventory and receivables, which are your current assets. Okay. Okay. Now, you all can ask me, how am I going to allocate this 70 million across five assets, which is goodwill, technology, brand, land, and building. Other net assets is of course gone. You all don't need to do it because why? It's your current assets which are never ever impaired. Okay. Your step number one, always, if there is a completely damaged asset, this fellow, can you see? This technology is worthless. Fine. Okay. If it's worthless, then that technology should not be presented in your statement of financial position. That needs to be completely removed. Okay, that needs to be completely removed. And how do you remove? You do simply an impairment. You do simply an impairment. They are telling technology is only worthless, right? The technology is valued at 5 million, right? So if you need to remove, what you all need to do is debit impairment expense of 5 million and credit your technology of 5 million. Okay. The reason why I'm doing is if that asset is completely useless, right? It is completely useless, then there is no point of you showing it in your statement of financial position. Okay. So then you all need to remove it. Then you all need to remove. So always in terms of allocating your impairment against a cash generating unit, watch out for any damaged or useless assets. Okay. Always your impairment will be allocated first towards those type of assets. Okay. So we know our total impairment expense was 70 million. Out of that, 5 million went against your destroyed technology, right? Then you're left off with 65 million. You're left off with 65 million. Now, now how will we allocate the remaining 65 million of your impairment on your CGU? Okay. So there's a small format that you all need to do, and based on that, you all be allocating your figures. Okay. So what you all know is your other net assets, which is 40 million. You all don't need to impair it. Okay, you all don't need to impair. Okay, here it is. Yeah, 40 million. You all will not do any adjustments, right? Because why? It is your current assets, and current assets are always they are correctly recorded. Okay, so you all don't need to do anything. Now, in terms of the other remaining assets, how do we allocate this 65 million? I told you, right? We first need to follow an order. Always, first is you allocate it towards your goodwill, purchased goodwill, not internally generated, and then any other remaining assets based on your pro rata basis. Okay. Now, you all need to follow this format I told, right? This format consists of just simply it has to have assets, your carrying value before impairment, the relevant impairment expense, and your revised carrying value. What do I mean by revised carrying value? This is a value that you will be showing in your balance sheet finally after all the revisions. Okay, this is a final figure. Okay, so what I did was I just went and mentioned all the figures here. Look at this 20, 10, 50, and 30. All of this I went and recorded. Okay, so out of the 65 remaining impairment expense, I will be first allocating it towards my purchase goodwill. Okay. So after I allocate it, my revised carrying value in terms of goodwill, which is part of my cash generating unit, will become zero. Okay. Okay. So out of 70 million you had, 5 million went towards your destroyed technology, 20 million went towards your purchase goodwill. Okay. So then you're left off with 45 million in terms of the impairment. Now, how do I allocate it? How do I allocate it? I told you, right? There's a method called prorate or pro rata basis. This is how I'm going to do it. We have a remainder of assets of 10 million, 50 million, and 30 million. Sum all of this up. They would add up to 90 million, right? They would add up to 90 million. And what is the balance? What is the balance you all have? What is the balance you all have in terms of impairment? You all only have 45, right? So based on each asset's carrying value, you all need to prorate it. For an example, this asset's carrying value is 10 million, right? So 10 million divided by total number of remaining assets, which is 90 into 45. You'll come up with a figure of 5 million. Same thing happens for land also. Same thing happens for land also. I'll show that also. Land's carrying value before impairment was 50, right? Divided by the total carrying value of your remaining assets, which is 90 into 45, right? Then you will be arriving at a figure of 25 million as your impairment expense. Finally, in terms of a building, your building had 30 million as its carrying value under your CGU, okay, which is a group of assets. It had 30 million, right? And the remaining carrying value of your remaining assets are worth at 90. So how do you allocate this 45 million? Again, you need to prorate. Okay, and you will be arriving at a figure of 15, right? So after you remove all of the impairment expenses from the relevant asset, you'll be arriving at 5 million, 25 million, and 15 million respectively. Okay, so this is how you do your allocation of impairment in terms of cash generating units. First, in summary, always if there's a damaged asset, completely remove that damaged asset. Then after that, if there's any remaining impairment, you need to follow the order. What is the order? Always allocate it towards your purchase goodwill. And then on pro rata basis, which is this, on pro rata basis, which is this, you need to allocate your remainder of your impairment expense.